Welcome to Trading Lounge and the Forex report for the Asian pairs, but starting with Bitcoin today on the daily chart here. Now, we've been waiting for this for a little while in terms of after experiencing this parabolic third wave here, an A and a B and a C for wave 4 here. So we're looking up for 1 and back for 2 and looking up here for higher ground above 500 here. So I'm thinking that basically to scale in through group 1 here, which is 400, 410, 420 and 430. If support is found on 430, then that would separate the market from the 400. Now you can see here that it tried to maintain support above the 430 here, above group 1. It's failed at that point, but that's what we'd be looking for next time around. So yeah, markets always do the opposite. So next time that gets up there, but basically saying is that whatever money that you put in at at these lower levels here, then that would be at risk until the 430 has become the tested support. But it's a worthwhile risk reward ratio for this market. Okay, moving on a little bit, and the Australian yen also too is presenting a reasonable opportunity on the long side now. That I guess the main point here, without getting into a lot of detail, is that halfway between 80 major trading level and 90 the medium trading level, we have the minor trading levels 1, 2, 3, 5 and 8 here, and 5 is the most important. 5 is the second strongest number, and you can see that that this is basically this market swinging across this particular price point 85 into a point where it becomes changes from resistance to support, and that's pretty much on cue here. So we're looking for this market to work itself higher through here. The Australian market, the Aussie Australian, because the Aussie yen is pushing up, it's quite possible for this to continue up here. So we need to understand at what point we would be wrong, because what we're looking for at the moment is an A wave to here, a B wave to here, and a C wave to here. Well, this C wave should come down to the wave 4 of 1 lesser degree, but I don't think we have to come that far. I think that wave A and wave C would have some sort of equality here, and then move up from that point there. So we just need to be a little bit careful that, if this is going to continue higher, well, obviously we need to be on it. So this 76 number is important, but 76.50 here is more important. So if the market on the outside, you see it finding tested support or even break through the 65.50, then you know that you'll be moving to the upside then. So that's at that point where you would know that you're wrong at that point. So now, I think there's some better trades in this region rather than this particular one at the moment. Now, this move here from wave 3, we're looking at this as the A wave, then A and a B and a C wave here. Now, I can count 5 waves in here. Mind you, they're not the best looking 5 waves that I've ever seen, but it's doable. So in terms of shorting, really a breakdown in this little trend to the upside here would be suitable for a short trade here. Otherwise, if this is going to continue to move up here, then this also needs to be counted as basically 1 and 2 and 3 and 4 and 5 to here, and then move down. So that would leave us at the 76.50. The 61.8 retracement level is lower here, so that would be well on top of that box there. So that's an important point. So I think this would run with the yen, the Aussie yen. That's what sort of bothers me about it a little bit. So anyway, short under these current levels here would be viable, and yeah, just let me double check a second. So from the high here, you know, we can count 5 waves down in terms of 1, 2, and 3, and 4, and all the way down here for 5. Then this counts as an A wave to here, a B wave in 3 waves to here. So we'd be looking at a C wave coming up here, which would be the 1 and the 2 and the 3 and, well, the 3 there and the 5 here. So we don't really want it coming much higher than that. So if it only goes to 3 waves up here, this is where you would look for a short trade under here, or looking for breakdowns, you know, further in this area through here. Now, I think better shorting would come in terms of, well, first of all, we'll look at the pound Aussie and the euro Aussie now. So you can see here that we're looking for that wave 4 there, and wave 5 is on its way now. So we can look at this being, well, we're still looking for a 4th wave will come into play, and a 5th wave down to 1.15 here. Now this market's already moved off here. Okay, so it appears that the euro Australian is just sort of following this one a little bit. So let me just find this here. So we were looking just on the daily chart while we're here, we were looking for 5 waves down here. Okay, so this is the bottom of wave 3. So we're looking for wave 4 to be here. Looking for something a little bit more complex, but this is fine. So because the pound Aussie has moved down, we should see this break lower through here now. So maybe just let me have a look on a smaller time frame here. Okay, so yeah, we were considering this being wave 4, but it was possible that there could be more in this here. So what I can see here is that if I counted in a negative way, obviously would see this as wave 1 now, and wave 1, wave 2. So in wave 3 coming down through here, we would look at this as 1 here, an A and a B and a C for wave 2 here, and then coming down for wave 3 here. In this one here, we'd look at this as wave 1 here, wave 2 here, and then wave 3 coming in 4 and 5 to this here, then a wave 4 here, which would be part of this one here, then down here for wave 5, and still one more to go through here as well. So we're really starting to see this break away to the downside now. So this would make quite a nice short trade here. You would need to leave the stop above the 148 area here. So we'll just copy this, and well, we've got the green line there anyway, so we'll just put that in there as a short, but keep the stop above the 148 here. Those little highs just in here, 148.27 should do the trick on that one there. So I think that that's probably you know, it's a reasonably safe trade because it's a following stock. Now stocks that break out and lead first, they tend to range much further, but the risk is higher in those because you're not sure of the breakout at this point. But then you get these markets that just follow. They don't range as much, but they're kind of safer in a way. All right, thanks for tuning in. Cheers.